1971, Nixon comes on and says US dollar is no longer redeemable for gold. And from that day forward, we have pretty much been globally on what we now know as a fiat monetary standard. So fiat literally means, if you Google the definition, means by decree. So it is money by decree of the government. So the only thing backing the dollar's purchasing power is your trust and faith in government. And if the last few years have taught us anything, that trust and faith in global governments is really starting to erode. And it's only accelerated by the fact that they've printed this money out of thin air. So people are starting to lose faith in the dollar.
Today we're going to journey through Bitcoin, not just the what and the how, but the why.
2008, the money printer started, and then 2020, it went into overdrive. It went absolutely parabolic. You can Google the M1 money supply. It's a graph that illustrates the base money supply in the economy. I think it starts at like 1960, and it's quite flat line. There's not a lot of new currency units that get introduced. So 2008, they start printing, and you can see that line start to increase, right? And then you hit 2020. They started printing money in 2008, and they thought they could get away with this because it didn't trickle down into asset price inflation at the grocery store. And then they hit 2020. They locked down hard. They're like, we need to get money into the hands of spenders here.
Why has Bitcoin, a mere collection of code, stirred souls and ignited debates all around the world at different levels and tiers of society?
And then you start reading about Bitcoin, and then you get obsessed, and you start reading more about Bitcoin, and then you start annoying your friends and family about it, and you start talking about it at parties and dinner parties, and your significant other goes, oh God, here we go again.
We're glad we adopted Bitcoin. If we look at the 3-year chart from August 10th of 2020 to today, Bitcoin's up 145%, the S&P is up 37%. Gold is down 3%, bonds are down 18%.
The market actually shows you what's of value, and you should pay attention to it, because if a bunch of other people think it's valuable, that might well be valuable.
So this idea of Bitcoin being the pristine economic coordinator gives us perfect price signals in a way. So it lets us remap to reality much more quickly, drives innovation, drives wealth creation, all of these things.
All civilizations that fail throughout history ultimately failed because of their monetary system. And their monetary system ultimately failed because someone, whether it was the government or someone else, could violate proof of work. It's how the whole transatlantic slavery started with the agri beads that everyone in West Africa, these beads were their money. The Dutch settlers realized, we could just counterfeit them. We can make as many as we want. And they just basically decimated generations of money overnight.
Yeah, baby!
Sovereign states of mind.
In the vast digital expanse where bytes and pixels dance, there's a revolution brewing. This revolution is not just of technology, but of thought, philosophy, and the very essence of value itself. Welcome to another episode of Sovereign States of Mind. To me, it's very important to discover all the ways to reclaim my consciousness over my thoughts, my decisions, and my actions. In this episode, we're going to talk about something we don't always talk about, but it's a very critical, important part of your financial sovereignty. You have a bank account, you see the number on the screen, you trust that bank isn't gonna suddenly erase it and you have zero. But as we saw over the trucker convoy, the freedom convoy in Canada, or even politicians in the UK right now, Nigel Farage, their bank accounts are being blocked because of their dissident political beliefs. You might think you're safe right now, but at some stage, they'll come after you too for your beliefs. And if you want to have any kind of integrity or stand in sovereignty of what you believe, if you want to hang on to your money, Bitcoin is probably going to be one of the main ways, if not the only way, to do it.
But you can absolutely take self-custody of Bitcoin. And like you rightly pointed out, with great power comes great responsibility. If you fuck this up, there's no back button. And that can be a little bit intimidating for people. But it is actually if you can drive a car, there's a little saying that's been kicking around lately. If you can drive a car, you can absolutely self-custody Bitcoin. It's totally within your capability to do. But you've just got to study Bitcoin, study how to self-custody, and understand what that means and what you're actually doing.
Many people recognize Bitcoin as an investment vehicle, but really it's a vehicle to take the power of our wealth back, the power of our savings, and put it into a new system that does not propagate the endless wars, the endless theft by taxation and inflation, and the forever struggles between classes, thanks to a ruling predatory elite autocracy that doesn't really care for the people like you and me. Daz Bea and Looking Glass Education has been a powerful contributor in demystifying the seemingly complex world of Bitcoin, and I'm really excited to have him on here today. So tune in, lean in, and let's embark on this enlightening expedition.
Transforming you as a person.
True freedom comes from within.
This show is brought to you by Kapi Hawaii. A few months ago, when this company approached me and said, we'd like to sponsor your podcast, I was ecstatic. I had worked with Kapi in a different form. It's a brew down in the Amazon. You go do ceremonies with shamans. And I had some really profound changes happen in my life. I recognized I was not taking responsibility for myself in deep, troublesome moments. And I would always find a reason to victimize myself. And this was a habit I had grown up with. The Kapi vine at very large doses made me recognize this in just one evening. At microdosing levels, you can expect to gain better clarity over yourself and create more space in the moment between reaction and response. And to subtly enhance the focus you have in your everyday life, whether that's being present with your children, being creative, working on your business, whatever it might be. It is a very special and sacred plant that humans have used for tens of thousands of years. I'm actually very excited to see it being used more globally now in different ways, including this microdosing gummy. You can get them at kapihawaii.com. It's all already locally grown on the big island of Hawaii, organically processed. It's FDA approved. It's not psychoactive. It's non-impairing. It's very subtle, but very profound. And there is no other product I would actually want to have sponsored this show. So I'm actually very honored for it to be the show's sponsor. So check out kapihawaii.com and you can get 15% off your first purchase with promo code Jordan. Kapihawaii.com, CAAPIHAWAII.com. If this product sounds interesting to you, this is a great way to support this show by checking it out. And I do not think you will be disappointed either by these microdosing lozenges.
There is a lot to learn from this episode, so I would say if you're interested in bringing these points home, check out sovereignstatesofmind.com. There's a blog post on this episode. You can read through it. You can see more of the points in detail, and you can also sign up to the newsletter, Sovereign States of Mind. Without further ado, let's get started.
You're listening to Sovereign States of Mind.
LookingGlassEducation.com.
Initially, the intent was to break down the complex macroeconomic and financial landscape for everyday people and just put it into simple to understand language. And that's sort of where we started, where we kicked off. And then, as you've rightly pointed out, there's all sorts of tangential avenues you can go down once you sort of start to understand money, start to understand Bitcoin, start to understand the centralized entities that sort of are built in and around money and the control that exerts on the general population. So there's a lot of rabbit holes to jump down. But yeah, mostly it was around trying to educate everyday people on finance and how money works.
Like what I try to tell people, like people think, oh, you keep all your savings in Bitcoin. Like that's silly. What if it goes down? I'm like, I'm not doing it for the money. I don't do it because I'm assuming it's going to go up. I do, but that's not why I keep my savings in Bitcoin. I do it because I'm opting out of this fiat system that ends. I mean, it's just nothing but more corruption, more war, more social inequality that will never end as long as we keep using fake money as the foundation for our commerce and society.
That's so well said. And I echo the same thoughts. So what started out as an investment sort of strategy for me was how I ended up on Bitcoin. And then just over time, as you start to really tear back the layers around how money actually works and the incentives that get built around that, like you rightly say, it's now my way to vote out of the current system because they control a lot of us through the money printer, how money works, how it is injected into the economy, aligns incentives on those decision makers who basically dictate global policy, and the way that money concentrates into those people gives them a lot of power and a lot of control. And like I just said before, that it allows them to use our capital to dictate global policy. Now, you might agree with that or you might not, but at the end of the day, there is a lot that comes top down purely from the way that money works.
Money Money is the fuel that drives our world. It is this abstraction that we use to communicate value in our transactions. But how often do we stop to ponder its true nature? What is money and why does it really matter?
Here's where you can get really bogged down into the rabbit hole around why. Like, man's search for meaning is always around why, the why, and you can remove that, right? Because you can get into some really dark places when you really start peeling those layers off to understand what's driving people to make these decisions. But even if you remove that, because that'll drive you nuts, right? And then there's this concept I think it's in the 7 Habits of Highly Effective People, right? So they call it the sphere of influence. What is in my direct control? What is in my sphere of influence where do I spend my time and energy to best affect what I have control over? Anything outside this sphere, you're kind of wasting your time on. And that's where you get down these deep, dark rabbit holes about global cabals and all this sort of stuff. And that may very well be true. I don't know. But what is absolutely true out of all that is that the way this thing works is absolutely impacting how you navigate the world. Money printing, their ability to print money out of thin air, absolutely results in high indebtedness and high inflation, and it absolutely keeps you a slave on the, a hamster on the wheel of indebtedness, right? So understanding that gives you a little bit of a framework to work around. So if you understand that and you accept that and you say, okay, well, what is in my direct control? What do I have direct control over in my life to be able to affect the way that I'm navigating through this? And one of those things is like you rightly pointed out, opting out with your savings. So if we look then at the financial system, whether it's purposefully obscured to make it too hard for the everyday person to navigate is beside the point. That's the way it is. Whether it's purposeful or not doesn't really matter, but just understanding that it is laid in these layers of obscurity that make it really hard for everyday folk to navigate through. What that incentivizes is for you, if you are able to hustle and get ahead, you are more than likely going to use what we call these passive investment vehicles.
When I say Wall Street, what do you think of? To many, they think of power and prestige, but just how influential is it? Now let's discover the hidden forces that shape global finance and in turn, the rest of the world.
I've done a shit ton of study on financial markets. So I'm an everyday guy. I'm a Sparky. I'm an electrician by trade, right? So I go to work, I earn a wage, and then I was lucky enough to have a little bit at the end of the day to try and put to work, to try and make it work for me. So I'm of that mindset. I love reading. So I gave myself 12 months to really understand financial markets before I put a single penny in. So I read all of the great investment books that you're told you should read. One Up on Wall Street, The Intelligent Investor, Margin of Safety, all of these books to try and understand what it was that I was doing. And all that really highlighted to me was how obscure it was. And even all of these great tomes on investing will normally always say, here's how you should invest. But you know what? Sometimes it's really hard to beat the market. So just buy the market. Now, what that means is when you're buying the market, it means go out and just buy a basket of the stocks that represent the general market. And normally what they are index funds. So the S&P 500 might be a term your listeners are familiar with. That is basically the top 500 companies by market weighted average across the US, right? Now, if you buy an ETF of the S&P that tracks the S&P 500, you are basically buying. So for every dollar you put in, you're buying X amount of Apple, X amount of Tesla, X amount of the FANG stocks like Netflix, Apple, Amazon. And you're doing that blindly. So they are investing it on your behalf. And there's this term in markets called price discovery, where if you know what if you were to go and buy a coffee shop, right? You go down the end of the block, there's a coffee shop down there. You're going to want to ask them how their business runs. How much coffee do you sell? What are your overheads? You know, what's your rent? What's your profit? How much do the cups cost you? How much is a coffee cup? You're going to want to know how that business works before you go and part with your money. When it comes to investing, you don't do any of that. You go and you say, I'm going to put money in, and these guys just go and blindly pay top notch for whatever's in that index of of funds. So what ends up happening though is all of our capital inflows then end up concentrating into the hands of a couple of entities that you mentioned before, BlackRocks, Vanguards of the world. All that capital ends up concentrating into these ETF funds, these companies that create these vehicles for you to invest in. And basically what that does is concentrate your voting rights. You're actually giving your voting rights as a shareholder of a company. You actually have a voting right. So if I was to go and buy directly Apple shares, I could theoretically, whatever percentage of the Apple share that I own, I have that much voting rights in the governance of the company. When you use an ETF, you're actually outsourcing that. You're giving that over to the Vanguards and the BlackRocks of the world who create these ETF vehicles, and then they will go and vote on your behalf.
Which is really on their behalf.
Exactly. And that's where you start to see these agendas creep in. Like, and whether you agree with ESG or you don't agree with ESG, at the end of the day, like, and that's, environment, social governance, if for anybody who doesn't follow that really closely. But some of those, the themes that come out of that may not necessarily resonate with you, right? But the end of the day, the concentration, like these narratives are getting formed up by these the people who sit on these boards, and they're using your capital to go and initiate global policy, using your capital to do so. And that's really where I come back full circle into Bitcoin, is like, like we mentioned earlier, how do we vote with our capital? It's just opt out of that system.
So Bitcoin is not just a mere cryptocurrency. It is a revolution in and of itself. But what is the philosophical driving force behind Bitcoin as this digital titan? So as I would explain it very simply, Bitcoin is a model for truth. There is no model for truth when you have a centralized group of people that can control something. So in the case of the US dollar, the Federal Reserve can print more dollars at will. When they print more dollars, the dollar becomes less valuable because there's more of them available in the supply. If you look at Venezuela or Argentina or many other countries over the years, Zimbabwe, their ruling parties have printed so much paper that those bills are now toilet paper or fuel for the fire. There is no escaping the fiat monetary collapse. Throughout history, they have never been able to survive because they were never meant to be more than just a temporary thing. Bitcoin, on the other hand, is a peer-to-peer decentralized system. It is not controlled by any one party, and the nodes that run the network are all around the world. And in order to shut it down, it would cost infinitely more resources than it would to simply join the network, mine Bitcoin, and be rewarded instead. You would make more money by just participating than trying to bring it down. Now, the way Bitcoin enforces its monetary policy through these nodes all around the world is through its code. Miners and nodes run this code. What happens is this code checks against a whole ledger. You've probably heard of the blockchain. The blockchain is a distributed ledger of all the transactions that's ever happened in Bitcoin. So all the nodes check each other's records to confirm that when I'm trying to send you a Bitcoin, that's a real Bitcoin, that I'm not faking it. So this code can enforce against what's called double spending. It can have a transparent ledger of all transactions ever since the very beginning. And then it enforces its maximum supply. There can only be 21 million Bitcoin ever.
And when you look at Bitcoin as a performing asset over the last couple of years, you can talk to any sort of money manager that's in this space, and they will say the worst allocation you can possibly have to Bitcoin is zero. You need to have some allocation to this because it is really coming to the fore as a completely independent, decentralized commodity. And there's a lot of things that make that powerful, which we can expand on if you like. But what it's basically doing is it's empowering wage earners to take control, take self-sovereignty of their money, their capital, and their savings. And it's giving people a way to beat inflation. So that's one of the byproducts I mentioned earlier on this monetary system, how it works is inflation. And we are really starting to feel the effects of that. So 2008, global financial crisis, the world was looking pretty dark. A lot of these big financial companies were starting to go under. So what they did is this fancy term called quantitative easing, right? Some of your listeners may be familiar with what that means. If you don't, it's basically a fancy way of saying money printing. Right? So they started printing money and injecting it into the economy in order to bail out the banks. And what they noticed is that we're able to do this. And how that works is basically they injected in the economy that are fancy asset swap with these primary brokers who basically are mandated to buy a certain amount of treasury bonds. I don't want to get too bogged down into the mechanics of that because it can be confusing. But what that essentially means is the controlling of interest rates is done through money printing. So they want to keep interest rates low because they think it generates economic stimulus. And the way that they do that is they print money and push it into the economy to control those interest rates. And that's what they did hand over fist through this period of 2008, post-2008, called quantitative easing. But what they noticed is they did a shit ton of printing through that period, but it didn't come and didn't lead to price inflation. It didn't trickle all the way down into wage earners. What it did is it boosted assets. So all of our assets, our stocks, our bonds, our real estate, they all performed really, really well through that period because we're controlling interest rates. And as you control interest rates down, asset price valuations go up. And there's a lot that goes into that. I won't, can talk about it if you like, but basically as interest rates approach zero, the valuation for everything else goes to infinity. So assets perform really well. Real estate perform really well. So when you're looking at the people who are making these decisions, a lot of them own a lot of these assets, right? So when they see their intervention into the market resulting in great stock performance and great asset performance, they go, we're doing a really great job. And because it didn't trickle down into everyday prices at the grocery store, at the fuel pump, stuff that really affects wage earners, they thought everything's hunky-dory. But what it essentially does is makes all of the assets out of reach of everyday people. So this was great if you already owned a home or you owned an investment property. But if you were one of these people desperately trying to save in order to be able to get a deposit to buy a house, your savings rate wasn't keeping up with this inflation rate of assets. So it's becoming further and further out of reach. Now you couple that with the fact that your interest rate in your bank account where you're trying to save was actually below the rate of inflation and below the rate of asset inflation, you were never catching up. So putting your money in a bank, you were going backwards.
Right.
You were trying to, work your ass off, and things are getting further and further out of reach.
And even I think going into the 2020s with real estate, especially, we're going to think that our investments are going up, but really that's because of inflation. And if you actually adjust it for the price that it was when you bought it versus the price maybe you sell it, you think it's at a gain, at a good profit. But really, if you account for inflation, you may have done a lot better keeping it in Bitcoin. But that's the question here is, where do we keep our assets during these times of inflation? So you just gave a really great introduction. I don't know which part of my audience will be listening to this, but just to hit it home, like 2020, when they printed all the money and gave Americans $1,200, there were hundreds of billions of dollars going to the airlines, going to the S&P, going to all these big companies, which basically it just keeps this loft of all this money here. And then they just trickle down some pennies to pretend that, like, we're looking out for the citizen here, when really, even back then it would hardly pay a month or two of rent, let alone 2 years later.
So 2008, the money printer started, and then 2020, it went into overdrive.
Yeah.
Like you rightly pointed out. It went absolutely parabolic. You can Google the M1 money supply. It's a graph that illustrates the base money supply in the economy. I think it starts at like 1960, and it's quite flat line. There's not a lot of new currency units that get introduced. So 2008, they start printing, and you can see that line start to increase, right? And then you hit 2020. And this is the sort of point I was getting to. They started printing money in 2008, and they thought they could get away with this because it didn't trickle down into asset price inflation at the grocery store, right? So inflation, the official inflation rate was just manageable 2 or 3%. And then they hit 2020. They locked down hard. They're like, we need to get money into the hands of spenders here, as well as asset prices, because that's basically.
That is crazy.
And it just goes up. And then now they're saying they're going through a period of quantitative tightening where they're trying to take some off the table, and you see that graph start to sort of decline. But it's never getting back down to pre-2020 levels. It's just impossible.
No.
Right? And so to understand how price discovery works in grocery stores, right? If you've got a finite amount of goods and so that's your supply, and then you've got demand. Everyday people going in, buying bread, competing for bread and milk and all that sort of thing. So you can liken that to like the currency units in circulation. So if you've got a finite amount of goods and services, real estate, assets, milk, bread, but you introduce more currency units competing for the same amount of goods and services, it's natural that prices go up. And that's what we're starting to feel the massive effects of post 2020 money print to go burr is normal everyday price inflation now. And we're really starting to hit it. And inflation's a funny thing. Once you let it out of the bag, it's really, really hard to rein back in. And what they've now had to do is, and this is the other reason. So we as a wage earner, you're getting shafted now because all your groceries, your energy, your fuel bills are going right through the roof, and your wages always lag inflation by a few years. So now our cash flows are really getting squished. So we don't have as much available to save and put away for a rainy day because we're getting shafted by inflation. And the other really important point to note here is this other technical term called financial repression. Okay. Now, what financial repression means is that government policy will deliberately hold interest rates below the rate of inflation. And why they do that is to inflate away their debt levels. So we've got massive globally. I don't care what country you're in. Go and have a look at your own country's debt levels. And we're at all-time highs as far as debt to GDP. So debt to GDP is a ratio of your productivity versus the debt that's overhead.
So is Bitcoin an investment or a statement? We tackle this question head on in just a minute here. But first, I want to tell you a bit about our sponsor. Kapi Hawaii is a microdosing lozenge of the Kapi vine. Kapi vine comes from the Amazon jungle. Humans have been working with it for tens of thousands of years. They brew it with other plants in order to amplify the effects of those other plants. Kapi vine is not psychoactive. It is non-impairing. You remain completely functional. It expands your present state of awareness. KapiHawaii.com offers these lozenges in different flavors, different tastes. They can be very delicious and very enlightening, very subtle, yet very profound and prolific. Use promo code Jordan for 15% off, KapiHawaii.com. So let's get back into it. Why do people really invest in Bitcoin?
What does all this shit mean? And what does it mean for me? And how do I navigate it moving forward, right? But basically, when you've got so much debt, one of your only ways to control or to inflate that away, to get that debt under control, you've got really two main avenues. One is tax everybody. So if they raise taxes in this current environment, there'd be riots in the street tomorrow. The other way you get rid of it is through what we call a stealth tax, which is called inflation. So it's, if we can erode your purchasing power over time, it also erodes our ability to service our debt levels. So $30 trillion is what we've got in the US now for debt level. That seems really, really high. That's a shit ton of money. But is $30 trillion that bad when a loaf of bread costs 1,000? So that's what we're trying to get to, is this point where we can erode away the purchasing power of the underlying currency. And 30 trillion then doesn't seem so bad, because if house prices are $1 million, a loaf of bread's $1,000.
Yeah.
You know what I mean? That 30 trillion doesn't now seem so bad. So what that means for you as a wage earner is any money you are able to squirrel away at the end of the day, you put in a bank account. If you're only getting 3% in your bank or 5%, whatever that may be, if that's below the rate of inflation, your purchasing power erodes over time. So for every day that interest rate is below the rate of inflation, you are losing purchasing power.
I think there's a calculator out there too, where you can, I think I saw it from a Bitcoiner. I don't know how well we can Google it, but yeah, you can actually calculate that if you Google it. You can put in your wages, you can put in what your local inflation rate is, and you can find out what's going on with your savings. So
yeah, we've got a few examples in our course there. The course that you're looking for, if you want to understand all this stuff, is called the Foundations course. Debt, inflation, and the bigger picture.
Okay.
And it's free. Absolutely free to go and do.
Yeah, I love how everything is free on here. All right, can we see that okay?
We didn't want price to be a barrier to entry.
Oh, this is so
the free
important.
Foundations course.
the Fear Foundations course on lookingglasseducation.com. It's free, 2.5 hours. So this will teach you all about money, inflation. Does it get into Bitcoin?
Yes, it does. Yes. So the whole premise behind this was to frame up monetary history, how we've used money over the last couple of centuries, how we ended up on what we call a fiat monetary system, which is our current monetary system. And it's really important to note, money as we know it today has only been around since 1971. This fiat monetary system is new. It's not something that we've traditionally, like the dollars existed for hundreds of years, but the fiat monetary system, and that is what's backing the dollar, is a new concept. It's only been around since 1971. Well, basically in that course, we frame that up, what that means. And then we also look at what the impacts are to you as a wage earner due to this fiat monetary system. And that's mainly the over-indebtedness and the inflation, which we've been talking about today.
I think
it does.
I think in the Bitcoin standard, he mentioned some instances. Fiat has never lasted this long, I don't think, without like imploding,
Correct.
like since we went off the gold standard. But I know World War I was basically extended and prolonged because they started just printing money.
Really good point. So throughout history, fiat money has absolutely existed, but it's normally a temporary thing.
Right.
So they go on it and they come off it. And it's normally to fund a war. So traditionally, throughout monetary history, our dollar's always been backed by something physical and scarce, and it was typically gold. Gold was the premium monetary good. So what you would do is you'd hold gold in reserves in your central banks, and then you would have a dollar representation, a paper representation of the gold backing. So you can go right back through history, and on the dollar, US dollar, it used to actually say, redeemable for gold on presentation to the treasurer. And that's been taken away over the years. So what they would typically do is leave that standard, print money, win a war, seize the gold, seize the assets, seize the resources.
Make up for it, right.
Make up for it, and then repeg back to the gold. So they'd done that in the Civil War. And that's how we got the term greenbacks.
Right.
Those greenbacks weren't actually backed by anything. They were paper to pay for the armies, right?
Mm-hmm.
Same thing, World War I, World War II. So World War II is where things started to change. So World War II, US was really late to the party. And they were funding everybody. They were, making tanks and planes and big guns and ammunition. They were sending all that overseas, and all the gold flowed in the US. And after World War II, finally America gets involved, drops a couple of big bombs and says, yay, we won. And then they all sat down and said, oh shit, we've got no gold reserves in our central banks. This is everyone else in the world. What are we going to do? So they all met in Bretton Woods, New Hampshire, in the States, and they come up with the Bretton Woods System. So because a lot of the gold concentrated into the US, they said, all right, well, we'll peg our dollar back to gold, and then everyone else peg your dollar back to ours. So we had fixed exchange rates, and this system we now know as the Bretton Woods System. You fast forward through to the Vietnam War, and very expensive war for the US. They started to print money again and expand that peg versus the dollars, the paper dollars versus the gold. And France were apparently the first to catch on to this.
Yeah, Charles de Gaulle came with an army, right? Or came with military presence to get their gold back.
a big freaking battleship, And it wasn't like as a threat to the US, but it was a battleship to basically say, we want our gold because we know what you're doing and we want it back. And this was 1971. And we now know this as the Nixon shock. Nixon comes on and says, from this day forward, the US dollar is no longer redeemable for gold. Our dollar, your problem. Go fuck yourselves, basically. And from that day forward, we have pretty much been globally on what we now know as a fiat monetary standard. So fiat literally means, if you Google the definition, means by decree. So it is money by decree of the government. So the only thing backing the dollar's purchasing power is your trust and faith in government.
Uh-oh.
And if the last few years have taught us anything, that trust and faith globally in global governments is really starting to erode. And it's only accelerated by the fact that they've printed this money out of thin air. So people are starting to lose faith in the dollar. And this is why when you are able to latch on to any dollars, you ultimately know without knowing, it's a subconscious feeling that your dollar is losing value. So you'll actually latch onto anything else you're able to get your hands on, right? And that's why
what they
real
want.
estate's always exactly.
That's the point of inflation. Keep you spending.
Yeah, exactly. You want to offload it because it's good for the economy, right? So your spending is someone else's income. So it's an economic trade. So they absolutely want you parting with your dollars. But if you were lucky enough to actually be able to save a substantial amount, you're then looking for, where else can I put this? And then it just ties all nice and a nice little bow, all these incentives. So you're going to do real estate, right? As a proxy for saving, or you're going to use these passive ETFs, which is they know you're too dumb to do your own investing. So you're going to use these ETFs, right? They're relying on the fact that they make it so.
We're just too busy.
Complex.
Too dumb or too busy?
We're just too busy.
Yeah, we got things to do.
Well, exactly.
Yeah.
Well, exactly. I shouldn't say dumb because it's definitely that's their term, not my term, right? They're relying on the fact that you're working 60 hours, you're both flogged out, you and your wife. All you're going to do is come home, turn on Netflix and tune out because, you've got an hour to yourself before you got to prep for the next day and do it all again.
So this is a good introduction to inflation, to why the financial system is kind of fucked, and why, if you're not already, you should be looking for an out with your wealth. And so gold comes to mind, maybe silver. And then, as we'll talk about, Bitcoin is probably the most important thing to really understand. And what's really important about Bitcoin, don't just buy it, learn it. Really understand what it means and comprehend the gravity of the situation. With only 21 million coins maximum in circulation, you don't have an inflationary monetary policy where they keep printing more, like the US dollar. You have actually what's considered a deflationary monetary policy, where with time, the value of one Bitcoin will continue to go up against other assets, especially other inflationary assets. But Bitcoin is not just a hedge against inflation. It's an investment in the future. Now, real quick, I'd like to look at the idea of Bitcoin through the lens of nature. If we approach money as a store of energy, you can convert all your energy into money. You can sell oil, you can sell your time, you can sell a good, whatever it is, you can convert it into money to save it, to convert it into a different energy later. Bitcoin is a closed system, similar to mathematics or physics. It has rules. No energy can be created or destroyed within that system. 1 + 1 must equal 2. Yet the dollar system is not closed at all because it can leak energy when they print more of them. I recommend looking into a guy called Michael Saylor, especially his episodes with Robert Breedlove on the What is Money show. It's a really good primer on understanding money as energy and how Bitcoin solves a lot of the problems we see today. But in essence, most of the power, influence, social discrepancies we see around the world is because of printing money. Bitcoin fixes a whole lot of problems just by prohibiting people from printing money. Bitcoin is peer-to-peer money that doesn't need a government. And how Bitcoin is an amazing solution. It's genius. And it was wrought out of the 2008 financial crisis. It started not long after that, because we needed a solution to fiat currency. Instead of by decree of the government, we needed by decree of the people. And this is a decentralized peer-to-peer network of money that so far is working. Seems to be pretty solid.
First one, study Bitcoin. You have to absolutely study it. It's volatile in the short term. And what that means is its price can swing around pretty violently. And that's a function of it doing its own price discovery. And this is like that term that I introduced before. It is finding price discovery. It's really starting to find its value in society as a monetary good. And while it's in that price discovery mode, it naturally attracts traders. And then traders create volatility, which reinforces further volatility.
Yeah.
So you get really big price swings in it. So if you went and you lumped in your whole lump savings in one big hit right back in the peak of 2021, you're going to be feeling pretty crap about yourself right now, because it drew down from, I think, 60,000 US, don't quote me, down to, I don't even look at the price.
18 or so, 16, 17.
Down to 18, back up to around 30 now, right? So if you put your entire life savings in at 60 grand, you're still only halfway back to what you want. And there's a couple of ways you approach this, right? But absolutely what you have to do is study it. There's two things with Bitcoin. There's Bitcoin the asset and Bitcoin the network. So Bitcoin the asset is the dollar denominated thing that goes up and down in price. But Bitcoin the network is really where the value proposition is starting to come from. You touched on a few points there, like peer-to-peer, decentralized monetary good.
No government.
And basically, no government. It's banking the unbanked. If all you need to do is is get access to a mobile phone and internet connection, and you can be your own bank now. That's something that's pretty mind-blowing, and it's not something that us in the developed world necessarily grok straight away. We don't really understand the need for it, right? But if you're in Zimbabwe, where you're experiencing multiple double-digit inflation, this becomes really, really important because it's about relative pricing power and relative pricing, your purchasing power in dollar terms and Bitcoin terms, and that ability to be able to spin up your own bank, basically just with an app on your phone, is what's really the value proposition. For me and you to be able to exchange value digitally in what we call a digital bearer asset. I can prove that you sent me the Bitcoin because I run a node. A node is a piece of software on a computer that confirms I've got a copy of every single Bitcoin transaction that's ever been. And I know all of my addresses, and I can look up on the blockchain to know that my balances, I can confirm all of the transactions that belong to me. I can confirm all of the balances that belong to my addresses, the addresses that I've got the key to unlock. And that's a really, really powerful concept, because when we think about a traditional bank now, it's very rare for us, and there's all these wars against the cash ban, right? But if you even put that aside, most of our bank accounts are just a digital ledger. And what we do is we put an inherent amount of trust in somebody maintaining that ledger. So your bank has its own ledger, and it's got, Jordan's bank. Here's Jordan's account number. Here's Jordan's bank balance. And we just put an inherent amount of trust in that system to know that they've got it right.
And that it'll still be there tomorrow.
That'll still be there tomorrow, and they're not lending it out beyond, their ability to pay back and all these sort of things. There's a lot to be said about that alone. The difference between that and Bitcoin is that we've got a centralized ledger now. We've got a ledger that everybody owns a copy of. Everybody's checking the validity of everybody else's version, and we're doing that through what we call consensus. So I'm checking my version of the history of the ledger of everybody's addresses and everybody's balances against your copy of it. Are we in consensus? Do we agree on the truth of every single block that's preceded us for the last 13 years? Yes. Right. Now we'll go to another peer. Are we in consensus with them? Are we in consensus with the next guy? And there's tens of thousands of these now, all checking each other. And that's really the value proposition, is around this monetary ledger that is globally distributed and checked all of the time. And we can remove the trust that we put in that system. So it's a trustless system, because now we're relying on computational power basically to prove everybody's copy. Now, what's really powerful about that is if you can go and change your version of the history, right, you can go for it. But you can't convince me to change my version of the history.
Or anyone else.
And that's really where the power comes from, around this decentralized notion of a globally distributed ledger.
Let's talk about what it means to be sovereign over your money. You mentioned a key earlier, but maybe someone doesn't know what their private key is. How do they access the Bitcoin network and know that they have this money? And remember that if you don't take full responsibility, you could lose it. That's the other side of this whole thing. So it's access to this network. You can get away from the state, so to speak, with your wealth, but it brings on a whole new aspect of really claiming sovereignty and taking responsibility.
Yeah, I'm going to plug this book you can see just above my B is for Bitcoin, big orange label. You can get it from Amazon. Something we wrote, myself and Seb,
cool.
One of the major partner of Looking Glass. It will be a free course within the next couple of months on Looking Glass as well. So it'll be called B is for Bitcoin. But you can buy this book now. And again, it breaks down exactly how Bitcoin works, the history, what centralization means, what private public key cryptography means, And it's in a really simple 160 page, easy to read, easy to digest. And again, we try to just strip out a lot of the complexity around the technology and just try and give you a couple of examples of what this means. So you raise a really good point, and we call it self-custody in Bitcoin circles. So you can go and buy Bitcoin on an exchange, but Bitcoin on an exchange is basically an IOU for Bitcoin. The exchange is controlling what we call keys. They're controlling your Bitcoin balance, but you can absolutely take self-custody of Bitcoin. And like you rightly pointed out, with great power comes great responsibility. Mm-hmm. If you fuck this up, there's no back button. And that can be a little bit intimidating for people. But it is actually if you can drive a car, there's a little saying that's been kicking around lately. If you can drive a car, you can absolutely self-custody Bitcoin. It's totally within your capability to do, but you've just got to study Bitcoin, study how to self-custody, and understand what that means and what you're actually doing. So if I'm to break this down really simply, your bank, your digital bank account that you've probably got a client ID that you log in, and you've got a password, right? And you log in and you can see your bank balance, and you've got an account number. So we call them BSB and account numbers in there. So there's a branch number and an account number. I don't know how it works in the States, but basically your account number, I can give you my account number and you can send me funds, but you can't do anything with that account number, right? You don't have my login and my password. So me being able to give that out is exactly like the addresses that we see on the Bitcoin blockchain. It's just a whole heap of account numbers essentially with balances. The difference being is I can have many, many different account numbers. So I can give you 5 different account numbers and you can send me funds against all 5. Now, where the analogy comes back to the bank is this notion of a key. On the Bitcoin blockchain, we use public and private key cryptography. Big fancy word, but basically all it says is that if you want to spend the balance that's in this account, in this public address, you need to provide me the password to unlock it. Okay? Now, the good thing about how Bitcoin works in this public-private key is I can have one really, really difficult password, which is a huge number, and it's also represented by 12 or 24 what we call seed phrases. So there's a bank of words that can represent this really, really big number, and it's just an easier way to interact with this really big number. So I'll give you 12 or 24 words, and we call that a seed phrase. That is basically your password to unlock your Bitcoin. And that same seed phrase can generate hundreds of accounts, thousands of different account numbers that I can give out all the time, and I can keep giving them out to different people so that I'm not giving the same account number out to anyone else. And why that's important is for privacy. So I can give you an account number for each transaction, and I can give you a different one every time. And then that way you can't see back in to see exactly how much Bitcoin I've got. You can only see what I gave you access to, which is just that one account number. But that seed phrase spins up a whole heap of different account numbers, but that's basically my key to unlock my ability to spend it. Does that make sense?
Oh, I mean, for me, yeah. Yeah, I get it. Yeah, I mean, and it's a whole rabbit hole here with derivation paths and the wallet you choose and how to do it. But yeah, this is all material in your book. Will you explain how that custody works? Great.
Absolutely. Yep. And all of that is broken down. And like I said, that'll be free. If you can't afford the sats to buy the book on Amazon, then it'll be free within the next couple of months.
And another thing I noticed Looking Glass Education touches on is just different varieties of self-custody. So you could hold it all yourself. You could have your 12 or 24 word seed phrase on your own, or you could have 3 of them, and 2 of them are required in order to access the funds. You could have a multi-signature wallet. And then there's different ways of going about that. One of those keys could literally be on a satellite somewhere that you access with a password. So there's different, it's not like someone could just come in your house and potentially, the $5 wrench attack, try to hit you with a wrench and get your Bitcoin from you. No, it can be much more robust of a security protocol than that.
Yeah. So what we try and do is eliminate what we call single points of failure. So one passphrase written down on paper one seed phrase, protecting your wealth, that's a single point of failure. Your house burns down, that paper's gone. Someone comes in, you don't keep that securely somewhere, or you forget where you put it, that Bitcoin's gone. So there are other ways of managing keys that can help you mitigate against yourself in some regard. Now, I've got a really good example here. I wrote this book and I can't get my wife to read it. She still hasn't read it. So when you are dealing with your own keys, you start to then think about, okay, well, what if something happened to me? If my keys die with me, all my family wealth is dying with me. So there are very clever ways that you can start to think about key management. And what you pointed on earlier is something called multi-sig, where you can have multiple sets of keys, and a combination of those can unlock your funds. So the most common is a 2 of 3 multi-sig. So you've got 3 keys that manage your funds, and you need to present any 2 of those 3, doesn't matter which 2, to be able to unlock your ability to unlock your funds and send them elsewhere. And then you can do really clever things with these. You can give one to your friend if you trust him. On its own, it can't do anything. So, but you're mitigating against your management of these keys. You can use a private vault server. I would recommend never using a bank, private, the deposit box, safety deposit box. I wouldn't use a bank's one. There's been evidence throughout history of seizure of contents of those boxes. But there's private vaults. You can put a key in there. There's third-party custodians like Unchained Capital. They can manage a key for you, and
Casa.
Casa.
What happens if
well.
these companies go out of business? That's what I always think about.
Yeah. So what's important with this self-custody model is what's called a vault file. So when you set up these multi-sigs, it gives you a file to download, whether you do it yourself or you use Unchained or whatever. There's a file that basically maps your 3 keys without getting too technical and bogged down in the detail. If you don't have that file, you need all 3 keys to recreate that vault.
Right.
If you have the file in any 2 of those, you can still unlock your Bitcoin. So the advantage of having, say, Unchained is that they've got a copy of your vault and they've got one of your keys. If they went out of business and you could no longer log in, you should take a copy of your file. You can download that and keep it on your own PC, keep it on the cloud drive. If someone comes across that, it means nothing. They may be able to look in and see your balances because it's got all your addresses contained, can be derived from that file, but they can't spend your Bitcoin having that file. They still need 2 of the 3 keys. So if Unchained went broke, you've still got a copy of that file and you've got your 2 keys. You just set up a new vault. You go and find another 3rd key and you go and recreate that and you shift all of your Bitcoin into your new vault, your new addresses. And so you're mitigating against that risk. What's just come to the fore in the recent months is a service called the BTC Advisor, the Bitcoin Advisor. There's a group in Australia, and you can start to leverage off what we're starting to understand around jurisdictional arbitrage. So you can actually give them a copy of your key. You can use Unchained, and then you have a copy of your key. So you're splitting it up against parties, you're splitting it up against countries, and basically you're the only one who owns the account. You're the only one who can initiate a transaction. But what it's actually allowing is for you to start thinking about inheritance and estate planning protocols. So for me, I use this personally. I'm just in the process of setting this up. And what was important for me is what I just highlighted earlier about my wife not being comfortable with key management.
Right.
So I'm trying to mitigate against that risk of something happening to me and we losing our Bitcoin. So what she can do is then go to the BTC Advisor. It's an inheritance protocol that's attached to my will. And then basically there's instructions for her to say, go on presentation of my death certificate, and as the executor of my will, they can unlock and set up a new vault for her and then move my Bitcoin into her. So it's mitigating against single points of failure in my own self-custody model. So there's all sorts of cool things happening around key management and because when we said before, study Bitcoin, the reality is when we go on board the next 7 billion people, because it's only a matter of time before people really start to understand it. Not everybody, we've got to be realistic. Not everybody's going to do the work to understand the importance of good self-custody. So I firmly believe it's only a matter of time before your everyday banks start to offer Bitcoin as a service, and they will absolutely want to custody it on your behalf, and they will absolutely rehypothecate it, which means lend it out again and borrow against it and do all sorts of their financial fuckery with your savings. So I think, while it's always best practice to manage your own keys, there's all these layers of complexity that we, as Bitcoiners, we've got to start to understand that there are absolutely a need for people to outsource some of this. But how do we do it in as much of a trustless way as we possibly can? How can we build in key management with layering in protections for you as the user so that there can't be collusion between parties? And that's what the BTC advisor's done really well.
Cool. Yeah, I just love the whole Bitcoin ecosystem because it does encourage, like I said earlier, taking responsibility and even just gaining the mindsets to know I can handle having these private keys. Like that's been a journey, and I've lost mine before. Like I know what it's like. Everyone has their rites of passage, like stuff happens in this space, but it's all part of just developing the sovereign states of mind of being able to be in control of your wealth. I mean, your wealth is important. It's the result of hard work. It's the excess hard work that you've put out into the world.
So we've got a service that we've just launched on Looking Glass called Coddle. So if you need somebody to hold your hand, we're available.
Coddle.
Yep. So if Coddle, little play on word on cold storage, and we'll absolutely coddle you through your. I mean, we firmly believe there's no such thing as an overprotective approach to self-custody. So if it's something that is intimidating and you want to be stepped through it, you want to be talked through exactly what it is and the best practices to do it, then by all means reach out and we can tee up a time to go through and hold your hand while you take self-custody and give you all of those options that I spoke about today in the trade.
Yeah, that's awesome.
That you might not be. This is something that everybody absolutely just needs to start understanding, and we're just trying to help everyday people. And that's what it's about, is just trying to put power back into wage earners. Like I see what's going on now, and it's, you see these terrible TikTok videos kicking around and people are really starting to hurt, man. And I just want everyone to know that it's a bit of a meme, but Bitcoin is hope. There is a path. There is ways that you can become more self-sovereign for yourself and putting protections in for your family, because the next couple of years are going to be ugly. Unfortunately, I wish I had better news for you. But the global financial system is collapsing. But we have a way to protect yourselves. And so you just absolutely have to study Bitcoin.
Study Bitcoin. So if there's any takeaways from this episode, things to remember, it's that Bitcoin is not just about algorithms and digital money. It requires learning about and studying in order to really jump in and understand it. It took me years before I finally decided, hey, all my extra money is going into Bitcoin because this is the peaceful revolution I want to invest in. This is what I want to be a part of. But no one told me to do that, just like I'm not telling you to do that. Daz Bea is not telling you to do that. What we're saying is do your research, start learning. And as you learn, the more podcasts you listen to, the more articles you read, you start to realize that Bitcoin is one of the most innovative and enlightening innovations to ever happen to humankind. And we are at the very beginning of its adoption. And it just so happens it could be a very lucrative opportunity. Huge thank you to Daz Bea for joining me today. Check out Looking Glass Education. Start learning. Shout out to people on Twitter like Daz Bea. They want to help you learn. And as usual, thanks for joining me in the Sovereign States of Mind podcast. As we continue to evolve, both materially and digitally in this new age of ours, it's important to stay on top of all the ways we can practice sovereignty. So stay curious, keep questioning, and always remain sovereign in your states of mind.